All right, well, stocks are looking to rally out of the gate this morning despite signs that inflation is here. Consumer prices rising more than expected last month, above 2% for 5 months in a row. That's raising pressure on the new Federal Reserve Chief, Jerome Powell, to prevent a possible overheating of the economy. Let's bring in Fox News contributor John Layfield and Ben Axler of Spruce Capital Management to discuss. Good morning.
Morning.
Good morning.
John, I want to begin with you. Are we worried about inflation or not? Because you've got stocks, yields, and rates rising at the same time.
Yeah, we are worried. I don't know how worried. I think we are concerned. PPG, Sherwin-Williams, Ford all listed higher commodity prices as hurting profitability. And I think you have oil prices up 50% in the past year, copper up 30%. I think there is inflation out there. I think this number was a bit skewed because of gas prices. You take gas out of it, it's only 1.8%. But I think the biggest point was last week we had a very volatile week that started because of a crazy short VIX fund blew up. Set off margin calls, set off computer trading, fund managers deleveraging risk. And this is the first real data point since then. So I think a little too much weight is being put on it. Are we concerned about it? Yes. Is it a huge worry? I don't think so.
But Ben, if we couple the data point being the CPI report with retail sales that have slowed down, you have an economy where you have higher prices and slower spending. How do you produce, even with the tax stimulus, how do you produce economic growth when you're in that kind of, they call it stagflation, that type of economy?
Well, I think it's a great question. We have to be very mindful that we're in an extended business cycle here. We've had rates that have been very low for a long time. We've had a lot of financial engineering to support stock prices. We've had accelerated corporate buybacks, tax cuts, cheap financing for M&A. Investors really need to be careful about what they own at this stage in the cycle and realize that stocks aren't buys at every given price, and you really have to know what you own here and play a little bit of a defensive when it comes to portfolio management and stock selection.
Yeah, and as for that's equities. As for treasuries, John, we saw almost a 3% for the 10-year yield yesterday, and that brings up the great rate debate. Is it the level of the interest rate that we're worried about, or the path, the speed at which you get there?
I think it's a speed because this has been telegraphed very well by the Fed. I mean, there's just no surprise. It's like inflation is no surprise. These rates are coming. It looks like we're going to have 3 this year. Those rates are coming. I think we have a real problem in our, we have a huge problem in our government with this fiscal irresponsibility. And these guys, if they can't balance the budget any better than what they're doing right now, we have a real problem with interest rates in the future. If it gets up around 4%, just gets up to around normal rates.
Yeah, I'm thinking Disney just raised their theme park prices, and Amazon raised their monthly Prime. Prices are going up. Yet Fox News, out with a poll, asked people, "How do you feel about your personal economy?" And, what do you make of this news? 23%, Ben, said they feel like they're getting ahead now. 52% said everything's steady. So are we relatively optimistic? What do you make of these numbers?
No, look, I think we do have a real inflation problem here. We have a stock market that's overvalued. So, look, it's important for investors to have some exposure to stocks, although at these elevated price levels, there's caution warranted. But I look at my own personal, bills that I'm receiving. Healthcare costs up 20%, maintenance costs for property up 7%, and wages, generally are stagnant or rising very modestly. And the costs of running a business as an entrepreneur, for myself, are rising. So I think, personally, it's hard to stay ahead when costs are rising so much.
All right, Ben, thank you. And John, just to rub it in, it's going to be like a spring day here in New York, so I'm not jealous of your background this morning. Bye, guys. Thank you.
Thank you very much.